Hello to all investors, great to see you. In today's video we'll do a quick summary of 3 lessons we should learn from his book, Learn to Earn by Peter Lynch. Please stay tuned to the end for the bonus lesson. Does the company have a story? With all due respect and no further delay, let us dive in. Lesson number 1, Picking your own stocks. Did you know the highest form of stock picking is doing your own homework and research instead of listening to everyone around you? Study inside out of the stock you want to purchase. And there are 2 kinds of information needed. A. Observation. See if the staffs are organized, are they overstaffed or understaffing? Is the business chaotic or everything is synergized with each other? A good example of this is by going to your local shopping mall and pick any store that is trading on the stock market or the company of your interest. Observe their physical store, and you can have an idea of how the company is run. B. Financial languages. Are they even earning anything? Are sales even going up? Please do note that even when sales are up, it doesn't mean that the company is profiting. For example, we can have a lemonade stand selling lemonade all day, our sales can be up, but if the purchase price for a cup of our lemonade is cheaper than our cost to produce it, then our sale is actually hurting our lemonade stand because we are selling it cheaper than our cost to produce. So be careful with looking at sales only. Is their debt going up and no extra earning is produce? Are they giving dividend, and if so, is it consistent? What is their stock price? Is it a fair price or overvalue? And the only way to know this is by understanding the intrinsic value of the stock. Please check out our site at valuesnip.com for free intrinsic value calculators. We will leave the description below. Thank you. Lesson number 2, The Power of Earnings. Earning power is the name of the game. Every stock is a business, and the main objective of any business is to make money. It doesn't matter if you sell a service or product, the main goal is to earn money, and this is where earning power comes in. Therefore, if earnings continue to rise, then the stock will go up, maybe not right away, but eventually, it will. Just as the late Mr. Graham once taught, in the short run, a market is a voting machine reflecting a voter registration test that requires only money, not intelligence or emotional stability, but in the long run, a market is a weighing machine. And vice versa, if the company earning power is going down, then eventually the stock price will go down. Don't overlook this common sense. This is why we must find a company that can earn many years to come as a necessity for growing our portfolio and wealth. Another lesson from this section, employee matters. If the company can manage to increase sale with lesser employees, it is usually mean that the company is very sufficient and efficient. The company probably have a system that adopts cutting cost and increase profits. If we really think about it, no company, not even a single company in the world that are trading on any stock market exchange, can be profitable without any employee. If you happen to find any stock that is trading on the market and they don't have any employee, please leave us a message below so we can short the living hell out of that stock.
Before we move on to lesson number 3, bear or bullish. May you kindly, please, if you can do us a quick favor? Please, click like and subscribe if you like what you are seeing so far, this will be amazing. This will help us a lot and is all because of you. So thank you so much for your like and subscription in advance.
Lesson 3, Bear or Bullish. Before you sell a good company that gives a good dividend, remember that you can still collect dividends in a bear market with a good company that still has the capacity to earn. Did you know if you buy during the peak before the 1929 market crash, also known as the Great Depression, you would need to wait 25 years just to break even? It is so dangerous to buy in a bullish market, especially in a euphoric one. A bear market is the best time to buy because you are buying great companies at a good discount. And if that company is still giving out dividends, what a wonderful deal. Another good example is in 1969, buying at the highest of that year will take another 7 years to break even. However, more loss from the market if we as investors try to predict the market and get in at the right time. Did you know even if we get in at the right time, we will only beat the market by 1.17% extra in the long horizon of 40 years? So the lesson is to invest now and be careful to invest more than you can handle in the bullish time, and go bull in bearish time on good companies. 4 keys elements from this section. 1. Start now. 2. Have a plan. 3. Do your homework. 4. Hang in there for the long term. Thank you for making it this far. Here is our bonus that we promise you. Does this company have a story? Buying a stock without the story is a big mistake. Don't confuse the story with the price of the company. Take Nike for example. The story of Nike is very simple. They sell sneakers when they first started. There are few elements to this story that we have to pay attention to. We should ask ourselves, is Nike selling more sneakers this year than last year? And can they continue their selling? Is it making a decent profit on its sneaker? Does Nike have cash on hand for a tough time? The sale is up or down? And how about its earnings? Are there any future orders? Those are the stories that we should ask when we want to buy a stock on the market exchange. From our point of view, another great story question that should be asked is, does Nike have any moat around it? Once we are satisfied with the story is a good sign that we might be on to a happy ending. And, before we let you go, please, if you do well or when you do well in life, seek ways to pay it forward to others that are less fortunate than you. This message was brought to you by payingforward.net. Direct giving is what they believe in. Their site is still under construction. Please leave your email in there if you want to get involved once it is up. They will never email you with any solicitation to anything else except for paying forward to others that are less fortunate. Thank you so much for your time and your attention.